Welcome and good afternoon, everyone. It's 2:30 and we're going to start our program for today. So let me please allow me to introduce myself. My name is Joe Wan. I'm the CEO of Tricor Hong Kong. Welcome again to the first of three webinars that we're going to host from today to the early next year on this very topic of leveraging Hong Kong's new development to preserve and grow your capital. Recently, our Chief Executive of Hong Kong, Carrie Lam, in her policy address, has laid out proactively the initiatives to consolidate Hong Kong's status as an international financial center and further strengthen our competitive advantage, including but not limited to the limited partnership funds regime to attract fund managers, all the way to establishing a dedicated team with Invest Hong Kong to promote Hong Kong as a financial hub. Now, Tricor, being a leading corporate solution provider, from incorporations, fund admin, to setting up family trusts, we are of course excited about the latest developments the government is pointing us to. And of course, we are proud to be part of that process to further establish Hong Kong as an international financial center. Today, I'm delighted to have three distinguished speakers from the Hong Kong MA, from the FSDC, and Invest Hong Kong to share with you their experiences in this particular subject matter. It's actually the first time the three organizations jointly have a webinar on this particular topic, and Tricor is delighted to be your host. So please let me first introduce you to three fine gentlemen who are going to act as our speakers today. The first is Dr. Rocky Tung. Dr. Tung is a head of policy research for the FSDC. He leads a team responsible for conducting policy research and industry surveys for the formulation of proposals to the Hong Kong government and its financial regulators. Dr. Tung is also experienced in research areas related to capital market structures, such as corporate governance, regulatory environment in the Asia-Pacific region. Next, we have Dixon. Dixon Wong was appointed as head of financial services at Invest Hong Kong, which is a government department responsible for helping overseas and mainland companies to establish or expand their business presence in Hong Kong. Before joining Invest Hong Kong, Dixon has over 20 years experience at an international bank holding various senior positions. Last but not least, Mr. Anson Law. He leads a team in the Hong Kong MA to spearhead development of Hong Kong's private equity and venture capital fund market. Before taking up his current position, Anson worked at the Hong Kong MA's direct investment team and risk and compliance department, where he was responsible for the exchange funds, private equity and real estate investments, and investment operational and business risk compliance matters respectively. Before joining the Hong Kong MA, Anson was a member of the Hong Kong SAR government as an administrative officer and served at various policy bureaus, including the Financial Services and the Treasury Bureau, where he acquired extensive experience in policy formulation. So we have three very experienced speakers today joining us. Now, the agenda of the webinar, the panelists will cover the following topics today. First is the routine family wisdom in Hong Kong. Second, Dixon will cover the key considerations for setting up family offices in Hong Kong. And last but not least, Anson will be covering Hong Kong's new private fund platform. So without further ado, Rocky, I'm going to ask you the first question. What unique advantages of Hong Kong in the Asia-Pacific region does make it a natural choice for family offices looking to establish a presence in the Asia-Pacific region? Over to you.
Thank you very much, Joe. Thank you very much for the kind introduction, and good to share the stage with my good friends over there at the Invest Hong Kong office, Anson and Dixon. Let me try to answer your question by doing this presentation and making sure that this is going to happen right. Please bear with me for the next 3 seconds. Can you see the screen that shows my presentation deck? Okay, wonderful. I see Dixon nodding his head. Thank you very much, Joe, for the kind introduction. My name is Rocky Tung, and I am the head of policy research for the Financial Services Development Council. It's not this one. Actually, I will share the. Right. So I am responsible for the policy research function here at the Financial Services Development Council. The FSDC is not like my friends over the other side. We are not a government party, so to speak. We are not one of the departments of the government, but we are an advisory body set up by the government to advise the government to do things that would be conducive for our sustainable development in the financial services sector. We were established back in 2013, and we were incorporated as a company by a limited guarantee, and the guarantor would be the HKSAR government. So today we are going to talk a little bit about the family office, which is a very hot topic here in not only Hong Kong, but also the Asia Pacific region. We see that from a smaller market like the Malaysia or to the other markets in the ASEAN region, they are all talking about methods in relation to establishing themselves as the family office. And here I am to talk about why Hong Kong is in a leading position to do that. But before that, I'm going to utilize the next 13 minutes or so to talk about a couple of things. First is a little bit about the family office overall landscape. Then secondly, it will be about what family offices usually do and why we are best positioned to serve them. And last but not least, I'm going to talk a little bit about how FSDC feels about the situation. So let's start with this. The overall family office landscape is, there are different things, but then they are much or generally divided into a single family office and multi-family office. So what is a single family office? If let's say Joe is an ultra high net worth individual, the Wang family wants to establish a family office, and it is just to manage it, Joe's family legacy and assets. That would be a single family office. If Joe wants to pool the assets from my very rich friends Dixon and Anson, then it would be a multi-family office. It's just as simple as that. And to my understanding, I feel that there are a lot of rich families in Hong Kong having a specific family office to manage their own assets, and those would be the single family office. But we are seeing an emergence of a multi-family office here in Hong Kong too. So I'm sure Joe would be in a better position to introduce them to you. However, on this slide, I would like to pinpoint two just to highlight two areas. One is that although single family office occupies the huge number, around 80% of the total setup of single family offices in the world, it actually manages on average a smaller size of AUM in general, which combines those would be the messages combining these two charts altogether. Then one of the key reasons why families are setting up their family office is for them to manage and preserve their assets such that the next generation and the generations after next would be able to enjoy the legacies. And so, like managing assets is a very important function. Here you can see that, the portfolio actually is very diverse, from cash equities to fixed income to private equity, real estate, and hedge funds. It's all over the place. And this is exactly telling you that, with our sophisticated capital markets here in Hong Kong, we are, in a very good position to serve them. On average, we can see that the family office delivers around 5.4% of returns between the year of second quarter 2018 to second quarter 2019. And among all the regions, Asia Pacific actually outperformed the other regions. You can see that in just on average, a family office would outperform MSCI World Index. So this is something that is pretty important too. And on the right side, you can see that one of the key reasons why I want to highlight that is that for impact and ESG investment, these are the themes that Hong Kong is trying to capitalize on, and the industry is very keen to develop these areas too. And we can see that this is something that family office are looking into as well. So I think this is going to be quite important going forward. Now, let's talk a little bit about how a family office, what are the key functions of a family office and why Hong Kong can help them with that. So this is something that I feel Dixon would be in a better position to discuss later. But then I also would like to highlight that they are going to require a very comprehensive of financial and professional services to support the operation of their family office in Hong Kong. And from fund administration to accounting to legal to some of these times when a family office would want to establish their presence here, perhaps the principal would be relocated to Hong Kong, moving to Hong Kong as well. So the principals won't come here just by him or herself, and rather they would have the entire family to be here. So education service is also very important. Then when you think about how investment in the world is facing much uncertainty these days, well, rather any time, but these days the uncertainty is just unprecedented at at this stage. So I feel that the access to mainland China and the access to the opportunities in mainland China is extremely important. So where we are located, and also our proximity to it, and also how understanding we are in terms of the culture, language, and rules and laws and whatnot. I think this is going to make us and distinguish us really from the rest of the region, if not the world, in terms of servicing the family office purposes. Hold on. Excuse me, I want to make sure this is happening right. Okay, so here you can see that Hong Kong is already the top and leading market, whereby there are cross-boundary flows of capital among ultra high net worth families. The numbers here are important, but I think the chart on the left is already giving you a sense of and visualizing how we are competitive against the peers. Switzerland, as you must be aware, the thing about the firms on the top of the table on the right. Of course, Switzerland, they are originated from Switzerland, and they that really explains to you why Switzerland is on the very top of the chart. But then, Hong Kong is right behind. Why? It is really not a surprise because all these firms on the right, they do have major presence here in Hong Kong. And so like think about it. If your family office is to manage access and you have access to all these wealth managers, of course this is going to make you better. So and on the other side of the same coin, you would wonder why these firms actually chose Hong Kong. The answer is very simple. We have the abundance of clients here, so it's a give and take. A key reason why we are so good at what we do is that we have a very vibrant IPO or capital market. Here you can see that over the past 11 years. In 7 of those past 11 years, we were the champion of the IPO or fundraising activities. We are not bad this year, but then like we may not be seeing the key or the very big market, the very big company to be listed here just yet. Yes, that is true. but we still managed to see a lot of very dynamic companies being listed in Hong Kong. The biotech firms, the also technology firms seeking secondary listing here in Hong Kong, even though they are primarily listed in the US. Well, with that in mind, I think this is going to add to our strengths and arsenal, depth and also breadth of our financial market. The right side, I'm going to just skip that. In terms of asset management, I have already talked a little bit about the wealth managers. Now here is what we talk about as asset managers. Think about the BlackRocks, think about the Investcos and other major firms here in Hong Kong. Yes, we do have a lot of them here, and their asset under management, which is the key metric that these firms look into, has been growing rapidly. Now, I also mentioned in my earlier slide that family offices do not only take stakes in the secondary market, but they are also very into the primary market. And now here, Hong Kong is the place to be. Look at the right-hand side. We are only, sometimes it's not too bad to be a second, because, we are second to a mammoth, if we are an elephant, then, the number one is a mammoth, really. So we are only second to the mainland China in terms of our private equity activities in 2019. And it's not only 2019, really, it has been the case. One of the reasons is that, these private equity and venture capital monies really flow into the opportunities in mainland China. And secondly, with their ability to move money out of and into China very seamlessly, this is making Hong Kong a natural choice for a lot of them. And that's why, the key PE managers are here in Hong Kong too. I guess I will save some time to not talk about this slide, but you are aware of where we are in terms of our connectivity to the mainland. And so, I'm not going to go too much into it. But in terms of family office, it's not only serving a retail client like me. I like wine, but, I drink something from New World because, I don't have the money to buy good stuff from France and the other places. But here, Hong Kong is really the largest export destination for Bordeaux wine with around 16% market share. This is extremely important because, families are not only buying these expensive wine for consumption, they are also buying it for investment. So this is something very important. The other important thing is that, the best art piece that I have is actually something drawn by my daughter. Rich families and rich individuals, ultra rich individuals, they are investing in art pieces. I hope one day, my daughter's piece sent to me for my birthday would become that important, but then not quite there yet. But rich families these days are investing a lot in alternative investment like arts, and Hong Kong is Asia's #1 and world's #3 in terms of art market, just behind, guess what, London and New York. And these things, my friends at Invest Hong Kong and HKMA, they are going to talk about it, I would assume. If not, we're going to cover it in the Q&A session. But the Hong Kong's very comprehensive green and green and sustainable finance ecosystem, as well as the products and the orchestrated efforts among government departments and agencies are driving the growth of this market. And so this is also something extremely important. Before I close, I'm going to talk a little bit about our paper published back in July 2020, so a few months ago. So even though we have already identified the strengths of Hong Kong as a family office hub for rich families consider their Asian operation, there are some areas that we believe can be improved. One of those is in terms of the regulatory clarity. On the one hand, even though we know for a fact that, like a lot of the families, if they were embedded in a family business, they do not need any license. But then sometimes if it is a segregate family office set up to manage assets of family members from the same family, but with different last names, they're not sure whether or not they would need a license too. So we identified that as an element that would require a little bit of clarity. And so, from there, we see that the SFC has already issued a Q&A back in September this year, saying that, this is not the intention for the SFC to regulate single family office, so to speak. The other regulatory clarity, we are quite there. We are quite there already, but we are going to seek improvement if you feel that there is any area that is that would require our clarification. The other point is that tax consideration is something that would consider conducive to our, like some tax incentives would be considered conducive to our attractiveness to family offices. However, I would always argue that, this is something good to have, but think about the family offices. They are rich. They also have the access to tax planners. So this is only some good to have. But yes, I trust the FSTB led by Mr. Christopher Hui, as well as the Financial Secretary, Mr. Paul Chan. They are going to find ways to make Hong Kong more attractive in that area. Thirdly, is the talent part. Like having family offices here, but with but if we do not have any talent to serve them, it would be bad news. We can't only rely on Joe. We can't only rely on Dixon and Anson to serve them. So we want more of these gentlemen. And of course, this is something that the government is very into. So they are thinking of ways to do it, as far as I understand. But last but not least, we also identified that there's a need for family offices to feel like a family office. So in that regard, we want to establish a one-stop liaison office such that when a family office considers Hong Kong, they are going to just talk to one party. And so this is going to happen. I think this is exactly when I should pass the mic to Dixon, my friend, who will be heading up that function. But yes, this is my presentation. Thank you very much.
Thank you, Rocky. Very insightful. We do see a lot in common that Hong Kong do have this competitive edge for family office hub here in Asia. So yeah, Dixon, would you give us some tips on the structuring and how to operate a family office?
Thank you. First of all, good afternoon, everyone. I'm Dixon from Invest Hong Kong. I'm heading the Head of Financial Services team. First of all, welcome to this webinar. The topic is very timely, leveraging Hong Kong's new developments to prepare and also the opportunities here. My subject is key considerations for setting up family office in Hong Kong. And really thank you, Joe and Tricor, for the invitations. As Joe has mentioned, this is the first time that three organizations speak together. We know Rocky, Anson, long time, and also Joe. So actually, a few months ago, we worked together on a number of different things together, including the launch of the Family Office website, which provide comprehensive information about Hong Kong advantages and also the facilitations that's provided by Invest Hong Kong. It is really my great honor to speak and also share my view with you all, and hope we can have an exchange insightful ideas during the last interaction section on the Q&A. My presentation today will cover 5 major sections. First of all is referring to the 2020 policy address in relation to FO, and then talk about global view on ultra high net worth individuals, then moving to Asia, Hong Kong trend on ultra-high net worth individuals, and finally about the key considerations and for setting up a family office in Hong Kong on the strengths and advantage of attracting family office. Policy address announced last Wednesday, Hong Kong Chief Executive stated that the government's ambition to develop the city into a regional hub for family offices. In short, we will be having a dedicated family office team here in Invest Hong Kong. Of course, this is a highly collaborative effort together with FSDC, FSTB, Hong Kong MA, as well as SFC. So what we're trying to do is to have that dedicated team to step up the promotion of our advantages and strengths in local and some key markets. So to offer one-stop services and support to those family offices who are interested in establishing a presence here in Hong Kong. As mentioned earlier, we have a dedicated family office website. Invest Hong Kong, again, work closely together with FSDC and Hong Kong MA to develop that website, which detailing the steps needed for a family office to set up in Hong Kong. The website also provides links to relevant circulars issued by the government departments relevant to family offices. In terms of the family office collaborations, going forward, we will continue to work closely with FSDC, FSTB, Hong Kong MA, and also the industry players, and also international associations and chambers to work closely to ensure the Hong Kong family office ecosystem is best for the family office business. So on screen, this is a global trend, ultra-high net worth individuals distribution. With reference to that survey conducted by Like Frank, I think briefly, Asia forecasts 5 years ultra-high net worth growth is doubled to North America's projected rate, with high growth expected in India, then China, and also Indonesia. So in China and also, Asia is having a very significant growth in Asia. And moving to Hong Kong, as you can see here, the wealth, in particular, the younger generation are not only concerning about the purpose of capital, but they are also more aware of the broader responsibility to society, as highlighted by Rocky earlier on the ESG impact investing. So they are actively looking to drive positive change in society as well as earning returns. The notable benefit of technology advancement is the convenience of accessing information whenever clients want, with touch points and access to digital tools and fit their lifestyle and needs. So ultra-high net worth individuals are increasingly looking for products and services to address different life goals. Providing information at fingertips alone will not lead to meaningful interactions, but relevance, consistency, and accuracy of information will definitely do. Moving to quickly overview of family office, what exactly, I think Rocky has highlighted earlier, what is family office in definitions. And its main goals are actually to successfully and efficiently protect, grow, as well as transfer wealth across multiple generations. In Asia, FO are used by ultra-high net worth families to address financial and non-financial needs, and I will explain a little bit more on both financial and non-financial needs in detail. But in short here, it's just actually the family governance, legacy, preservation, education, insurance, charitable giving, investing, and oversight of family-owned business. Family office is generally considered to exist where a family has employees dedicated to helping the family manage their financial affairs. So in the stages prior to creating family office, families would tend to manage their own funds and affairs with some level of assistance from professionals like accountants, lawyers, private bankers, and brokers. So we have, in principle, two types of family office, which Rocky has mentioned, like Joe, single family office. Joe can run single family office, where a family chooses to engage employees to manage some of all affairs of only the family office. A single family office is where a family office chooses to engage employees, and is focused more on the needs of one family only, and may provide services beyond financial management. For example, operations providing basic estate and wealth planning services. 1 or 2 employees may suffice. And you can see the different stages of a family office on screen. And there are other types of a family office like multi-family office. The multi-family office would also vary in according to the number of clients and also who are the decision makers, and also the level of engagement with the private bank. They also call the EAM, and primarily services from the service provider. So there are various types of a multi-family office, and you can see on the screen. So go to why they need to set up a family office. The reasons are pretty simple, the wealth protection, clarifying governance on family wealth, when, improving family cohesion and also generation transitions, as well as managing investment risk. And why, why they need to set up in Hong Kong. And I will explain a bit more later on. But in short, Hong Kong, as highlighted by Rocky earlier, access to capital, access to IPO deal flows, as well as PE, comprehensive ESG ecosystem impact investing. And Hong Kong is as an access point and also the lifestyle location. So all these making Hong Kong is a very ideal location for family office setup. Here is a summary of the financial and non-financial objectives of setting up family office. So across, the wealth generation, wealth transfer, as well as the focus on ESG, and also the impact investing, philanthropy, and of course, there are now other reasons, for example, the tax, the licensing, and I will go through that a little bit more later on. And here are the extract from the Hong Kong U Business School regarding the latest trends of the Asian family office, focusing on the non-financial objectives. So they are not just looking at the wealth generation, but also on other co-investment, as well as a social and sustainable development, including philanthropy. Here is a quick Asian structure of setting up the family office structure. A family office structure in Asia typically involves the family of holding company, we call the holding company, the family office, and as well as the investment vehicle via trusts. There are various commercial, legal, regulatory, tax, and operational factors when deciding which structure to adopt. So when making a decision, the family office will take all this into account. And Invest Hong Kong is also able to help introduce service providers, tax advisors, and also accountants, etc., to investors who are interested to setting up a family office here in Hong Kong. This slide shows the setup of a family office. Family office should be tailored to the needs and requirements of each family. So the broad steps and also the question that we usually ask to address in order to build a successful family office. There are various stages, and I will not go through each of these, but just highlight this for your reference. Cost saving is often a key driver on whether single family office or multi-family office is established. So a family office can typically cost over several $1 million US annually to operate. So it is generally worthwhile if the family office assets under management, we call the AUM, to be placed under the care of a family office exceed a certain threshold. So when the AUM is below several million threshold, it may sometimes be more cost effective or efficient to appoint a multi-family office instead. So until the family is ready to the needs to set up as a single family office. Again, this one is a summary of why investors should consider Hong Kong as a family office hub. I think Rocky has more or less covered a majority of all this. And I've highlighted earlier about why Hong Kong should be considered as a family office hub. Access to capital, PEIP deal flows, comprehensive ESG ecosystem, deep pool of talents highlighted by Rocky earlier. And in particular, I would like to highlight the Hong Kong's unique advantages and access to the Greater Bay Area, where there are strong PE deal flows, and also there are vibrant investment opportunities arising from the Greater Bay Area. LPF, this one is a very topical issue, a topical subject, and my friend Anson will definitely talk more on this, on the technical bit, but this is a Hong Kong's new private fund platform attract one of the considerations for family office to set up here via this vehicle. Hong Kong tax, this is one of the key considerations why family office should come over to Hong Kong and set up the presence here. Compared to other parts of the world, Hong Kong has enjoyed the lowest and simple tax structure here. And the fact that here, Hong Kong does not impose any sales tax, VAT tax, withholding tax, and also no tax on dividends and non-estate duties. So business individuals in Hong Kong can enjoy one of the most tax-friendly systems in the world here. And only 3 direct taxes are imposed, and there are many generous tax allowance and deductions that can reduce the taxable income. Licensing. Rocky has highlighted earlier, in Hong Kong, there is no specific licensing requirement for family office. The licensing regime under the SFO is activity-based. So if the services provided by a family office does not constitute any regulated activity, or they fall within any of the available carve-out, the family office is not required to be licensed under the SFO. Rocky also mentioned about the professional investor definition. So SFC has issued a published revised FAQ on the 8th of September. This is a very useful reference. I think investors, if you have any question on that, we are more than happy to assist in getting in touch with SFC to identify if there's any licensing requirement on this. But in general, this is a very simple registration. Hong Kong service provider, again, highlighted by Rocky earlier, we have an abundant support of professional services and talents here, including bankers, accountants, lawyers, tax advisors, as well as top global wealth managers who have presence in Hong Kong. So why your family office need to come to Hong Kong? Obviously, Hong Kong service providers, including Tricor, is one on the list. Wealth generation, wealth transfer, and also the client base. We have a number of investors with vibrant IPO and PE capital markets platform here. So there are a number of opportunities arising from the acquisition targets, M&A advisory services, as well as acquisition valuations and due diligence on deals. Before I close, I think briefly highlight, in case you're not aware, Invest Hong Kong engagement. We engage the international associations and also consulate generals, as well as regulators and government departments, of course, including Hong Kong MA, FSDC, as well as market players, including Tricor and many other banks and also Big Fours. So this is FO is highly collaborative effort. So we will engage all of you to have a wider and more positive impact. We would like to have more notable progress going forward. So we need more collaborations with each of you. And in terms of our services, Invest Hong Kong is a government department responsible for attracting foreign and mainland investors, including family office, to set up business in Hong Kong and help them achieve success. And in one of these friendly cities in the world, we have 10 specialist teams to assist clients at all stages of the business, from initial planning to the launch of the business to further expansion. So more specifically, Invest Hong Kong services, including company setup, visa, licensing, schooling, bank account opening, introduction of service providers, PR, marketing, support, office opening ceremony, and also the press release at no cost.
Oh, great.
Yes, it's really great, Joe.
Yeah.
So the last but not the least, we have, as I mentioned earlier, we have 10 specialist teams covering pillar sectors, innovation technology sectors, lifestyle, creative sectors, as well as an aftercare team based in Hong Kong, covering the city's priority sectors. So as I think we are coming from financial services team, we work with all the key stakeholders in the financial services industry. The last line here, our overseas network of staff and representatives based in 32 key business cities worldwide work seamlessly with Invest Hong Kong staff in Hong Kong to help overseas mainland companies set up and expand in our city, regardless of the size or business development stage. So even as a $2 capital company, we're more than happy to assist, including the setup, hiring people, as well as finding the office space. That's it. I don't want to go through the appendix, as otherwise I won't be able to give the time for Anson, my friend. Over to you.
Yeah, thank you, Dixon. Thank you. I do definitely enjoy working with Invest Hong Kong and look forward to more collaboration in the future.
Absolutely. Thank you, Joe.
All right, Anson, over to you.
Thank you, Joe. Thanks for the introduction at the beginning, and thanks for Rocky's and Dixon's presentation. Now, in the interest of time, I'll keep my presentation brief. So today's overall topic of the webinar is related to family offices. So the first question that some of the audience may have is, why should we talk about a fund structure, limited partnership fund, or LPF? Now, to cover this, I actually have a few points to highlight, which is number one, as Rocky has said earlier, family offices invest in a number of different asset classes. And from the investment side, we have seen in recent years diversification of, general diversification of the investment into different asset classes by not only family offices, but also a lot of other more sophisticated financial investors. For instance, sovereign funds, pension funds, they are also diversifying into more alternative investments. For instance, private equity and venture capital. And this LPF structure was designed primarily to cover those investments. So I see that's quite relevant to family offices. Number two is that regardless of this diversification trend, a lot of family offices already are using fund structures to hold their assets and family wealth. So regardless of whether they invest in PE or VC, they do need a structure. For instance, they may use a Cayman Islands SPC or other structures to hold their investments already. So this is, again, I think it's relevant to the notion of family offices for them to consider whether they would like to set up something under a newly, enacted regime. And number three, which is very important again, is as Dixon has pointed out, family offices are expected to, to have a structure in place which can sustain long-term investments, which can survive across generations. When we talk about family offices, we consider how wealth could be passed on from one generation to the next. And clearly, as we talk about this structure, we'll discuss how it is expected to survive the international scrutiny in terms of tax, regulatory, etc. So these first bit of my presentation of my slides, I'll skip. It's a lot of them are about how good Hong Kong is. So I think with Rocky's and Dixon's presentation ahead of me, I can skip that. And let's go to the more technical bit. Now, in terms of fund structure, a lot of PE funds, VC funds currently found in Hong Kong, they're active and they have been operating under an offshore fund model, which is anchored by, normally speaking, an offshore limited partnership structure. So this is the, in this diagram, it would be the green triangle at the center anchoring the fund. And in Asia, the most commonly used domicile would be Cayman Islands. Now, essentially, this model has been the norm of the industry, but then the industry also knows that there are some limitations to it. If you ask an advisor in tax or in compliance, they'll tell you that, well, if you set up this, you'll be subjecting your fund and operation to a decent level of risk operationally. So we need to make sure that certain activities do not take place in Hong Kong, otherwise you might be caught by relevant ordinances and get into serious trouble. And with COVID-19 hitting the world, it has been proven that traveling out of Hong Kong could be quite difficult at times. So this has been haunting the industry in terms of how they should operate. So apart from the operational hiccups that we discussed briefly, there are a number of trends internationally that are also haunting the funds industry. Number one is relating to tax. The Organization for Economic Cooperation and Development, or the OECD, has launched what they call a base erosion and profit shifting project, or BEPS project. So in a nutshell, Action 5 and Action 6 of this BEPS project would have irreversible impact, adverse impact on how the fund management industry should operate. Meaning that while the fund structures now, for instance, the offshore structure, today that may work for everybody or most people in Asia, in a couple of years' time, it may entail you into a lot of trouble. For instance, you may have trouble claiming DTA benefits, meaning that your investment base case, assuming that you are able to enjoy those tax benefits, does not sound. So this is serious, and this will hit the fund management industry. That's number one. So if you still think that, or try to hide away from this international trend, I would encourage you to look at what happened over the past 15 to 18 months, where, for instance, Cayman Islands has 3 rounds of tightening of its economic substance requirements, jetting up the cost of setting up as well as operation of PE and VC investment funds. If you operate a structure with a Cayman investment manager, you'll be required to register with the Cayman Islands Authority under a newly set up funds law. You'll also be required to hire investment professionals full-time on the soil of Cayman Islands and look at the population they have. So you can see how difficult in future you'll be in order to comply with those ongoing requirements. The third trend, which is also emerging, is a regulatory trend, where in the Europe, we have already seen a tightening in the European Union in what they call the AIFMD. So this directive has essentially driven a lot of offshore funds from domiciling in the Channel Islands, in Jersey, Guernsey, etc., into domiciling in Luxembourg. We're seeing this trend in Europe and earlier on in the US. So right now it's happening in Asia. So we have designed this regime with a view to helping the industries to solve the problems that they are facing. So in short, in LPF structure, as I said, is a limited partnership structure. So in order, if you want to set it up, you basically need to have one general partner and at least one limited partner. So in a family context, the LP can be understood as a family member, or in current trust structured context, it would be the trust beneficiaries can serve as an LP in the new structure. So a GP can be a member of a family or other third party appointed by the family. And in terms of investment universe, in our new regime, there's actually no restriction on the investable universe. So here I just give a few examples. It can be PE, VC, it can be traditional listed securities, it can be real estate, it can be cryptocurrency, anything you can think about can fit into this regime. So in this model, you also need an IM, an investment manager, to be appointed by the GP, which under the law is allowed to be the GP itself. So this chart gives a bit of detail as to what form a GP may take, an IM may take, etc. And I won't cover in my presentation in this session. So when we design this regime, we want it to be as flexible as possible. So while the starting point was for investment funds, it can be also used as a project fund or a feeder vehicle into a main fund structure or a co-investment vehicle or a family office structure. So essentially, as I said, the LPs will be family members, beneficiaries of the investments. Then you need to appoint an IM, or GP can serve as IM. So this is compatible. And I just highlight a few key legal features of LPF, and then I'll pass the time back to the chairman. Now, very importantly, when we designed this regime, we want it to work for the industry. Now, one thing which is very important is the confidentiality protection of investors. Now, please note that under this regime and under the law, when you set up this vehicle, you do not need to provide any information on your LPs to any government departments. You only need to give the company's registry the name of the LPF, the name of the GP, and the name of the investment manager, and some really general background information. For instance, why do you set up this fund? You may answer, for investment with a view to gaining profits, etc. As simple as that. So we won't ask who the LPs are. We won't ask how much capital you have put in. And therefore, it's highly confidential. It's akin to the Cayman setup. The other thing is that there is a safe harbor provision explicitly put into the ordinance. That, well, in general, when we talk about limited partnership structure, the limited liability protection is only valid if the relevant limited partner does not take part in the management of the limited partnership. So this safe harbor list essentially sets out a list of activities that a limited partner may do without being considered as managing the limited partnership. Therefore, we provide the legal certainty for the family members or investors, by going into this structure. Last but not least is the amount of degree of freedom that we have put in place in this vehicle. Now, in designing this, we have made reference to Cayman Islands, to state of Delaware in the US, Luxembourg vehicles, Singapore vehicles, the United Kingdom and Australia. So essentially we look at what fund vehicles, limited partnerships they offer, and we consider what good features are there, and we bring them all into the Hong Kong version. So if you compare the amount or degree of flexibility we grant under this regime, I can assure you that we will be doing best in class amongst any comparable jurisdictions out there. So in short, the if you want to build in some family governance provisions into this LPF structure, to the extent that it is not contradicting the LPF ordinance, I would say that so long as the GP and the relevant parties can agree, you can write it into the limited partnership agreement. So therefore, it would basically suit the family governance context of family office. So with that, I'm mindful of the time we have. So these just gives a comparison, high-level comparison between us and the Cayman Islands. You'll see that in terms of cost, is much less if you set up in Hong Kong than otherwise if you do it in the Cayman Islands. We now have 50 limited partnership funds already registered in Hong Kong. There needs to be no regulatory approval. We just need the registration. And the rest of my deck talks about tax in more detail and associated incentive for carry interest. So I'll skip all that. I'll pass back the time to Joe. Thank you very much.
Thank you, Anson, and thank you for your dedication to enhancing Hong Kong's overall competitiveness as a hub for private investments. It's very, very useful. I'm very aware of the time. We have received a few questions, but in terms of time, I'll just give you an easy one. Anson, it's directed to you. I think you've answered part of the question already, which is how many LPF has been registered so far. The answer is 50. And are there any industry feedbacks on how the government or the relevant authorities can make the regime a bit better?
Oh, sure. Well, how to improve the regime?
Yes.
Yes. We okay. Now we have because we have talked to a number of these 50 registered LPFs and the investment managers behind, as well as some other people who are now considering using LPF. Now, one thing that the industry really wants is that while they already operate, for instance, some offshore fund vehicle, that they want to have a channel to be able to migrate into the Hong Kong version of this limited partnership regime. So they want a redomiciliation and be made possible. Now, this thing we are currently working with relevant government departments and policymakers to try to make this happen. That's one very important thing. We are also working on some other initiatives to improve the fund level exemption, the tax treatment under this LPF regime. So that's another thing we are working on. Amongst the 50 LPFs that are already set up, many of them are from with a mainland nexus. So either the fund manager come from mainland, or they invest into mainland markets, or they are a fund manager which raises funds or part of their fund from the mainland. So with that, we can also further break them down into three categories: the larger fund houses, the mid caps, and the smaller ones. So the general feedback is that while the large ones definitely see merits in using LPF because they now have issues if they try to raise capital from more established institutional money, because of the reasons that we've talked about, the European developments, the international tax developments. A lot of people would want to refrain from being associated with Cayman or generally offshore structures. So that's among the big guys. The mid-cap ones, they are saying that, well, we already see a lot of benefits by using the LPF because we save a lot of tax expenses. We can enjoy Hong Kong's DTA network, which covers about 90% of APEC's deal jurisdictions in PE and VC. We also enjoy the best-in-class DTA terms with the mainland and India. So that's the mid-cap ones. And the smaller guys would benefit from, we also covered, is the significant saving in setup and operating costs. So with that, I would say that it's quite well received by the industry with a number of minor tweaks that we are working on. We can see that we expect the number of registered LPFs to be rising in the coming few months. Thank you.
I'm sure it will. Anson. So we're now 3:30. So I want to thank again Rocky, Dixon, and Anson for joining us in hosting the webinar. And thank you all, and look forward to our next one very soon, early next year. So goodbye. Have a good day.